Hi, everybody. This is Ross Healy, the chairman of Strategic Analysis Corporation and a manager for McNichol and Associates Asset Management. Welcome back to FANG Friday. Well, what's been going on? What I'm going to do this week is I'm going to get very up close and personal to a lot of the prices and show you what's been happening very, very recently. And well, here's Amazon. It's been lagging pretty much all the way through. Whether that's because investors are starting to shun it because its costs are starting to catch up with it, and perhaps the long-standing narrative of growth at any cost at the expense of profits. Maybe that's running out of time. I don't know, but the stock certainly has been not able to do anything for quite a while, and in SVA terms, it's actually drifting further and further and further away from its HB3 breakdown point. Well, here is Facebook, and look at that stock. It's struggling at its MSG price. That's 5.5 times its book value. It almost kind of feels like it kind of wants to go higher, but it can't go higher because it's sort of glued to the MSG price. So far, it's weathered the kind of what we would call its a failure to launch its cryptocurrency. And as well, some pretty nasty congressional testimony that was not been very well received. We have to face the fact, of course, that this remains the largest and the dominant social network, and therefore continues to matter as far as its growth metrics are concerned. Now, if those start to fail, of course, Facebook may turn out to be a fad and not a trend. But right now, as we can see, again, the stock looks like it wants to go higher and can't. Turning to Netflix, now we see that it looks like it is now actually trying to escape its HB3 that is 16 times its book value there. We have a 3% 5-day rule that says the stock must rise above a breakpoint for 3 days and remain there for 5 days. So far, what we've seen, we've got 3 days successfully above there. Maybe we're going to have to get into this stock whether we like it or not. Just the pure action, of course, of Disney, which appears to have captured people's imaginations, is enough maybe to pull Netflix along behind it. And so far, it kind of looks as if that's the case. Anyway, we've got about another day or so to wait to see whether we get a confirmed breakout. Microsoft remains right at that HB1 price. Little effort here trying to escape it. But of course, Amazon is now suing the government for what it charges is bias in the selection process. And as I've showed you in past FANG Fridays, the HB1 is a very, very important, very critical price for Microsoft, and I do remind you once again that the market has a memory, and when it gets to an old high, it really, really struggles to get through, particularly when, if I put the fair market value in, you see that the fair market value is almost 40% lower than the current price. Alphabet, well, At the beginning, Alphabet was higher than it is now. At the beginning of our FANG Friday series, it was higher. The stock actually fell and then recovered. Sorry, we didn't get the bounce, but nonetheless, the stock remains down from where we initially started to cover it, and it's actually risen to its low super growth price. That's 4.5 times book value. Hit it and has ricocheted right off it. So far, I have no reason to change my outlook on this company whatsoever. Here's NVIDIA. Well, the earnings and the revenue have rebounded. Now, the entire semiconductor industry can only be described as a catastrophe, with everyone guiding lower for 2020. So perhaps NVIDIA is bravely kind of bucking the winds of the industry, and perhaps it's running out of gas. I don't know. That would be just about where it was before in that previous peak. However, we'll have to say that we missed the breakout because we had 2 false breakouts before, and we don't apologize for buying companies that have huge downside risk. In this case, as you can see, minus 46%. Apple, well, who cares if they had 2 lousy quarters? And here's the stock that everyone just loves. Now, they've had poor reviews of their Apple TV, which even in the best case scenario is not going to be profitable for a few years. But look at that. Look at that thin trend. Look at that thin trend there before, and even there. When that kind of a thing runs out of gas, you can have pretty sharp setbacks. This setback here from that last sharp trend, well, that was a full 20%. If I just review our 10-year view of the company, you can see that every time in the past that it got up to its fair market value, that's that dotted line, that the company had fundamentally run out of gas. Well, this time around, it got there and above it. However, that doesn't mean that that fair market value is not going to drag that company down, and when it does, it might drag it down very quickly. Anyway, that's the look at the FANGs for this week. Remember, last week we talked about the market, and I said that our fair market value, based on a bottom-up analysis of all the analysts covering the S&P 500 stocks, that the fair market value for the S&P itself was 1,350. Well, the market got to 1,320, so it's getting very, very close. Anyway, in summary, as far as the FANGs are concerned, Amazon remains, as far as we're concerned, in a downtrend all the way, and we're going to wait for the next breakpoint before we'll even consider looking at it. Facebook and Microsoft look as if they're trying to break out, and Netflix looks as if it's almost broken out. However, we want that full confirmation before we would take action. Maxing out right now in terms of its price rise and now wicking down is Google. And as far as NVIDIA and Apple are concerned, well, we missed them. The industry fundamentals for NVIDIA are poor, so if the market can buck that kind of thing, all the more power to it. But the downside risk on those kinds of things is pretty awful, and Apple is quite extended. And we have been concerned because coming into FANG Friday, the stock had pretty much reached a maximum. Anyway, That's it for this week. This has been Ross Healy, the chairman of Strategic Analysis Corporation and a portfolio manager at McNichol and Associates Asset Management, reminding you that nothing, including investing, is difficult if you've got the right tools. I'll see you next week.